I think the biggest issue facing America and by virtue the global economy, because what happens here affects everyone, is the national debt. I think that that is so worrisome that I think that that will, if not dealt with, and I don't see an end game solution,
Right.
take gold well past 2002, an all-time record high that's far beyond any number I want to throw out at you over the next 3 and 4 years. It can't do anything but go up if our debt isn't dealt with. And that's the biggest issue we face long term.
The Fed has increased interest rates 11 times since March 2022 to tame inflation. Most Fed policymakers judged that one more increase in the federal funds rate at a future meeting would likely be appropriate. In contrast, some thought that no further increases would be warranted. Minutes from the September 2023 FOMC meeting showed. However, all agreed that policy should remain restrictive until inflation moved down sustainably to 2%. The Fed kept the target range for the federal funds rate at a 22-year high of 5.25% to 5.5% in its September 2023 meeting. According to Gary Wagner, the editor of thegoldforecast.com, raising the Fed funds rates, a typical tool used to combat inflation, is not the right approach. Due to the extreme global economic pain experienced in the past, and the recent efforts to normalize the situation, raising interest rates might not be effective. The most critical issue he sees is the national debt, which Gary views as a significant issue for the United States and the global economy. The U.S. national debt topped $33 trillion for the first time on Monday, crossing a critical milestone when government spending is already under scrutiny. He believes that if the national debt isn't effectively addressed, it could drive gold prices well beyond $2,000, setting a new record high. In the final quarter of 2023, the global financial landscape remains in continuous flux. Gold and silver face pressure from a strong U.S. dollar, robust central bank policies, and rising bond yields. By the end of September, gold dropped below $1,900 to $1,850, while silver slid under $22, breaking key support levels at $22.50 and $22.20. However, Gary predicts a rally in the prices of gold and silver, suggesting that gold could easily surpass $1,900 and reach $1,950 if conditions become extremely challenging, with silver rising above $25 per ounce. We will now bring you clips from Gary Wagner's interview with Wall Street Silver. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Of course, today we saw a pretty strong sell-off because of the CPI.
Right.
But I think we've got a base formed at the lows, recent lows that we hit. We've seen it rally and gold rally acting as a safe haven once again. We haven't seen that in a while. I wouldn't be surprised if things get worse before they get better, which I hope they don't. But if they do, gold will easily break above 1900, go to maybe 1950. If they get absolutely untenable, we'll see it go much higher. And I think that silver will rise back above $25 an ounce. My question is, how would the Federal Reserve respond? What tools do they have where they can shore up the banks? And it's not by making the Fed funds rate higher. It's not the right move.
Yeah.
It's counterintuitive because of the extreme pain globally that existed from 2020, just up until recently when things began to normalize. And as soon as they did, they put the hammer down. And historically speaking, I've lived through interest rates being double digit. I remember them well. I remember gas being a lot more expensive. I remember a point when inflation was double digit.
Yeah.
And we're not facing that right now, but what we are facing is a complex set of issues. And to me, it's not what the Fed is doing. I believe that they can adapt and change. I don't think they will. I think the biggest issue facing America and by virtue, the global economy, because what happens here affects everyone, is the national debt. The geopolitical stuff, that's got to run its course and be resolved with some sort of peaceful transition. I don't know the end game to that either. And that's why, whereas I typically come on here and I'm confident about my beliefs, which I am, but I'm not confident about what I'm seeing in terms of the financial environment and the geopolitical environment. To me, it's something there's a foreboding need to fix this, to bring peace somehow, and to live within our means. And I don't see that happening with our government till something catastrophic happens, and bank failures could be the first domino that falls, so to speak.
The stock of global debt rose $10 trillion in the first half of 2023, bringing it to a new record high of $307 trillion, according to a report by the Institute of International Finance released Tuesday. The U.S. debt situation is looking increasingly precarious, and corporate defaults are up as interest rates stay high, according to the International Monetary Fund. As the national debt has soared, the U.S. Treasury Department has had to borrow more money to pay for government spending. Gary sees the current fiscal policies allowing for deficit spending as unsustainable in the long run. The rate at which the increasing national debt surpasses GDP growth is a worrying trend. In September 2023, the U.S. government's debt exceeded $33 trillion, growing in nominal terms relative to the U.S. gross domestic product, GDP, with a debt-to-GDP ratio of 120%. Gary references the 2% target, which started in 2012, and suggests that the government should have kept borrowing costs low to facilitate economic recovery and growth, especially during challenging times like the pandemic and the subsequent global recession. Let's get back to the interview.
Fact is that our debt is accumulating faster than our GDP is growing, and that is not sustainable. That's got to change. And I've been an advocate for a while of, first, the idea of the 2% target. Started in 2012. Well, we just came out of one of the hardest global times in history, with the beginning of a pandemic and then a worldwide global recession. And the fact of the matter is they should have continued to keep borrowing costs down so that people could recover, recuperate, and grow, so that the GDP could grow. And the thinking has got to change in Washington. It's got to change by the Federal Reserve. If not, there's going to be a lot more pain before we have solutions. I believe it's already digital. I don't carry much cash in my wallet, but I don't see a difference between digital and printed currency. I believe that both are fiat and both are backed by an enormous amount of debt, rather than being backed by the faith in our government, where here in the United States, we've got, over $33 trillion of debt.
Wow.
And so whether it's digital debt or currency debt and paper money, I don't see a difference. There's going to have to be a dramatic shift in thinking in terms of what Washington does in their budget. You and I, the people that that listen to us, we could not afford to spend what we don't have the way the government is.
Right.
And that's not sustainable. Everyone acknowledges that. So it's not so much, if it's, to me, whether it's digital or how long they remain printing paper money. Eventually it will move to digital, but something's got to change on the policymaking in Washington that doesn't allow this kind of debt to accumulate, and has some concrete plan to somewhere down the line balance the budget.
Gold and silver prices rebounded, approaching two-week highs in Asian and early London trading, marking a recovery from a late September decline. Analysts suggest the possibility of the Federal Reserve ending interest rate hikes underscoring the market sensitivity to economic data and monetary policy, shaping the future of precious metals. How will gold and silver prices be influenced by the Federal Reserve's actions and the national debt soon? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.